Hi guys, Chris here. I just want to show you a way that you can potentially get into a trade a little bit earlier and perhaps have a little bit of a tighter stop loss, which will potentially lead to greater profits. Yeah, obviously the first thing you need to do is identify the trends. Once you've done that, like we teach you on the course, when you have your A, your B, and the name of the game is actually trying to identify your C points as a turning point that you can trade. So we do that obviously by looking at the trends, drawing trend lines, looking at previous support and resistance, and also drawing Fibonacci from A to B. And that gives us our zone. If we're looking back, I won't bore you with the whole thing now, but we'll have an area that you are actually looking at as a potential reversal area. So what you would do is you would wait for the price to hit into that area, and at the same time for the stochastic to actually be in the correct place, which on this occasion is in an upward trend. It's the oversold place. So once those two things have, or once those two criteria have been met, then one of the things you can do, obviously we're looking for signals on the price action here, but you can also pop down to the lower time frame. On this occasion, it's the 4-hourly, and just see if there's any divergence or reversal patterns which are occurring. So what you can see here, for example, is the stochastic has now gone over to the oversold section. It's made a little retrace and then come back down to actually make a double bottoms. You've got, if you draw, what's interesting is if you draw a vertical line at that point, and then another one at that point, you've got on the price action a low which is slightly lower than the previous one, but on the MACD you've actually got an upward slope. So when this happens, we call this divergence, and it's a sign that the price is going to turn the other way. It doesn't always work, but it works a lot. So train yourself to look out for these divergence points, and they're especially powerful when you are expecting a potential reversal, in other words, in your buy or your sell zone. So we've got a double bottoms here. It's confirmed by the divergence there, and then all we do is we wait for a couple of signals. After we've got that divergence, so you've got a Bollinger Band signal here. You've got a bullish engulf which is closed above all these three previous candles. Then you've got your stochastic is popped up through the 20 and crossing over. And it's also, if I look very closely, I sometimes need to zoom into this. At that point there, then your MACD has also popped out of the cloud. So you've got some very strong signals there indicating a buy. So you could have bought at that point there. And then obviously you need to position your take profit and your stop loss based on the time frame that you were looking at originally. So you could have your take profit perhaps at the 23.6 Fibonacci, and your stop loss, position our stop loss like so. And if you'd have taken that trade, then you'd have got a 3.4% profit. I'll just go through one more example quickly. Yeah, so we identify it's an upward trend. We've got an A, B, and we draw our zone, we draw our Fibonacci. We look at previous support and resistance, and we get ourselves a zone. Once the price action goes into the zone and the stochastic goes into the right place, which is around about here, then we will go down to the time frame below and look to see if we have any divergence or reversal patterns. So here we've got, again, we've got a double bottoms. You can ignore this zigzag. It's only got 1, 2, 3, 4, 5, 6. We need at least 7 candles. Our zigzag would look something like that. A stochastic there is in the oversold section. So if we put a vertical line at that low point there, where the stochastic is, and then we do another one over here, and you can see price action is sloping down. The MACD is sloping up. So again, we've got that divergence pattern with it's a confirmation that this is a double bottoms. We've had after that, we've had that big bullish candle there. We've got obviously your Bollinger Band, and at the same time we've got stochastic poking up through the 29. And if we needed any more confirmation, we could wait for that MACD. So you could potentially enter on that candle. The close of that candle, we would need to position our take profit and stop loss based on the daily. So we perhaps go for a Fibonacci extension 23.6. Position our stop loss. And again, we've got a nice 3.4% profits. So I hope that makes sense, guys. Really, it's just about looking out for double bottoms, divergence, head and shoulders, inverted head and shoulders, reversal patterns basically on the lower time frame. And that helps us sometimes to get a little bit of more a tighter entry on our orders so that we can maximize our profits. Hope that makes sense. If there's any questions, then pop onto the chat room, give me a call, pop into the office, yeah, drop us an email, send us bird mail, smoke signals, any way that you like, we're here to help. Thanks, guys.